Of course, venture capital and private equity is a very interesting area in the region as well. Joining me to share some thoughts on the opportunities in the region is Solomon Asamoah. He's Deputy CEO and Chief Investment Officer at the Africa Finance Corporation. Solomon, it's great to have you in the studio today.
Nice to be here.
So let's talk about the opportunities. Recently, we've seen an influx of quite a number of global VC and PE firms coming into Nigeria, the likes of, I think, Zephyr was here. We have, of course, Actis, we've had Emerging Capital Partners, etc. Quite a number coming into the region. So clearly there's something they're looking for. What are the opportunities that we see in VC and PE in the region?
Okay. I think they're wide and they're varied. I think the biggest attraction for the region is obviously Nigeria, because it's the largest market and potentially the largest market on the continent for private equity investors. That's why a lot of the international players are focusing on this region. But they also have a lot of interest in Ghana. Now with the political situation resolving in Côte d'Ivoire is quite interesting to a number of players.
Absolutely.
Unfortunately, Senegal's gone a little bit off the key at the moment because of political problems. But as soon as that turns around, I'm sure you're starting to begin to see a block of countries and a larger pool of potential investment opportunities for equity.
But how do you approach it? I mean, the equity markets are known as a risky place to be, but VC and PE, perhaps the risk is much elevated and perhaps the risk of the reward is elevated as well. But how do you approach a region like West Africa, given the issues of conflict, the history, the political uncertainty, and of course, the underdevelopment of infrastructure?
Right. I think carefully is probably the best way to describe it. I think there's maybe 3 or 4 main things that private equity investors look for. First of all, they look at the price at which they're going to enter into the investment. So that's got to be an attractive price of which they can make a good return. Then they also look at the sponsors or the management. Can these people take this company to the next level? And then the third thing they look at is the market. Obviously, can the products and services that the company produces, is there enough people willing to buy it? And then finally, probably fourthly, they look at the exit. How can they get out at a good enough return? I think those are the 4 factors that really drive a lot of private equity investment. And in West Africa, what you have is potentially a good entry price for buying some of these stakes quite attractively. You have a market which is underserved. So you have a market where there's good growth potential for the right kind of company and the right kind of products. And that's what a private equity investor looks for. The challenge is often the exit. Right. And how do you get out once you've made the company grow? Typically, private equity globally look at listing or things of that nature, but that's probably less likely in the West Africa region. So we look for trade sales, we look for mergers and acquisitions, we look for strategic buyers who will come in once we've created the value to take us out.
Now the AFC, obviously, to some extent, you can say you're involved in private equity, and just by the nature of the investment, although it's very focused on infrastructure, clearly. But give us maybe can you just touch for us your experience investing in private equity in the region in particular?
Sure. The AFC is kind of a little bit of a unique animal, and it's probably worth me just explaining a little bit. We do focus on infrastructure investments across the continent, but we can provide debt financing, but we can also provide a lot of private equity financing. Right. And that gives us a unique balance to the way that we approach our investments. In addition to that, we're not a fund, so we don't have that pressure that a fund has to deploy its capital maybe in the first 3 years of the fund. So we can take a longer term view. We can also look for investments which give us a very good dividend flow, and we don't have to exit. So we have a little bit more patience. And that's really important when you're looking at the infrastructure sector, because these are long-term investments which take a long time to put together. And so our experience has been there's lots of potential growth areas in a number of the sectors. Infrastructure, most traditionally though, private equity looks at more fast-moving consumer goods, tourism, those kind of areas. But West Africa has a very unique blend. Because you have a lot of infrastructure deficits, there's a good potential for equity investments in infrastructure. And the way that AFC approaches it is that we're trying to develop infrastructure financing as an asset class in itself, which is very true in many other parts of the world, but less true in West Africa. So what we do is we develop the projects more. And then at the stage when they've been developed, we can actually call our private equity colleagues to also come and participate in the investment with us.
Earlier you mentioned some of the challenges related to exiting from your investment, but another challenge perhaps in the region could be fundraising. It may not be the case for the AFC, but clearly there are some PE investors who obviously have to raise funds from across the world. They are competing with other regions in the continent. To what extent would you say that's a challenge for PE investors in West Africa?
It's a challenge, but there's some positive things to the side of it. Africa has often been ignored from international global finance. And so you find that a lot of international players with a lot of money look to put a little bit of money in their terms into Africa for diversification prospects. Right. So they are looking for a good home for their assets in Africa. That's a positive thing. So there's a lot of money that's actually earmarked or allocated for Africa, which helps the private equity funds tap into those funds to raise the funding for that. The other story is that a lot of the early stage private equity investors have actually made good returns in Africa. It's one of the better known secrets, or the best kept secrets, is that actually there's very good returns to be made in Africa. And so a lot of people have made good returns. A lot of fund managers have actually delivered to their investors, which means that the ability to attract second and third lots of funds is really there.
Let's talk a bit about the returns. I mean, like I mentioned, it's a risky place to be, private equity, venture capital, but traditionally the returns can be huge. What can we expect from a region like West Africa? I know it's a general statement, but maybe you can share from your experience as an infrastructure investor.
I think typically, as we all know, money prices for risk. So the more risky perceived, the higher the returns needs to be. And I would say you can get very good, even in excess of 25–30% return for private equity, which is very good in the region. And it's partly a combination of the fact that the markets are not mature. They're not perfect. So if you know what you can do, if you know what you're doing, you can identify very good opportunities that you can get involved, get a good entry price, and then reap the rewards later. But you have to know what you're doing, because just as easily as the opportunities, you can lose your money very, very quickly.
But how do you identify these opportunities? I mean, West Africa has so many countries. Obviously, Nigeria is more or less the big opportunity there, well over half of the opportunity, if you like, in terms of GDP and population. But the unserved sectors include things like financial products, telecoms, infrastructure. Looking across West Africa, how do you pick out these opportunities? Because VC, it's very delicate investment. You need to find the really best opportunity in an industry.
Yes, I think there's a couple of things that you do. Number one, there's no substitute for going to the places and meeting the people, talking to people on the ground. I actually find a good source of potential deals financial institutions on the ground in the various countries, corporate finance boutiques, small individual players who have a good sense of the market, as well as other private equity funds as well. You'll be surprised how much collaboration there is amongst private equity, because we don't like to take all of the risk of a project by ourselves, so we look for co-financiers. So often we will identify an opportunity and call a co-investor to come along with us as well. Right. And so it's just a question of going there, doing your homework, meeting people, discussing. There's no substitute for that. You can't do private equity by remote control. Right. You can't sit somewhere in a nice office and expect, once you've invested, to have your money come back to you.
I spoke to CEO recently. He said good old-fashioned shoe leather. You really need to get out there and find them.
Absolutely. And then once you find them, you need to manage them and grow with them and make sure they're doing the right thing, and then you can reap your rewards.
Solomon, it's great to have you in the studio. Thank you so much for joining us.